Now, traders have been closely watching oil because of its influence over other financial markets as well. The oil losses have been so big, they've caused investors to sell other assets to cover their losses in crude. Plus, a 63% decline in oil this year. 63% is hurting the US shale industry, of course, which relies on the fact that oil has been so expensive. It's a big driver of the economy and employment in the US and a huge part of the plans of the US government too. All right, let's head now to Chief Market Strategist and the founder of Technical Trader Limited, Chris Vermeulen. Chris, thanks so much for your time.
Yes, thanks for having me on the show, Aaron.
Yeah, we're talking about oil. I mean, it just keeps dropping every day. What's behind this?
I know it's a never-ending kind of bleed out in crude oil. The charts are red week after week, and today really just was an absolute shocker. I follow the front month contract, and it actually went negative today, which is crazy. I remember watching the price drop below $4 and $3 and $2, and it's so amazing how price has been moving. You know, when you look at the current contract right now, it's around the $21 mark last time I looked at it, but the futures and the way the market is moving, it's so, you know, out of this world unique, and how that the crude oil went down to below $1 today on the front month contract. There's just too much supply. There's nowhere to put it, and nobody wants to take delivery.
Now, the price of oil has, of course, been coming down for a little while. So it's obviously been made worse by coronavirus. But what was happening before coronavirus? Just give us an idea, because as we're seeing, quite often the things that are collapsing at the moment are the things that were already in trouble as we led up to the collapse. So just give us an idea of what's happening there.
Well, yeah, demand's been declining going into the coronavirus. It was struggling a lot. There's been a lot of news, headline news. We saw crude oil spike a couple times with headline news and bombings in the past, and of course prices sold all the way back down, and just the lack of demand continues to pull the price down. And the chart from a technical standpoint is showing just continuous bearish pattern. So it'll sell off, and then it'll form a pattern for a few weeks, even a couple months, and then it'll continue to collapse and fall. And the coronavirus was really the nail in the coffin, just killing all travel of all kinds. And now there's just no one to use up the crude that's coming into the market. And really, it's going to be interesting to see how it gets dealt with, because a lot of these companies can't just turn off the faucet. It takes them weeks or months to wind down. And if there's nowhere to store it, what is going to happen with all this crude oil coming out of the ground?
And let's talk about stability in some of these regions as well. Essentially what oil has done since World War II is stabilize some areas of the world that have traditionally had a lot of problems. We think of the Middle East, we think of even Russia. We know that the Russian president, we were told, I remember a few years ago, The Economist magazine had a story saying if the price of crude drops below 70 a barrel, Russian President Vladimir Putin is finished. Think of where we are right now. He's been trying to turn this into a positive, but there will be a lot of workers who will be put out of work from this, and where do they turn their attention? On governments. You think of Saudi Arabia, you think of Russia as well. Talk to us about the geopolitical side of this too.
Well, crazy enough as it sounds is I don't follow the geopolitical side at all. I'm a pure technical analyst, and my number one goal is to be able to follow the price as closely as possible. And really, it doesn't matter what happens globally, because I'm simply following the actual price action of the contract. And as a trader, the only way you make money is if price goes in your favor. So I don't really get into the nitty-gritty of news and earnings and follow OPEC and all the other geopolitical things. I strictly follow the chart.
From the financial point of view then, from the, as you say, tracking side, what's been happening in Russia and Saudi Arabia to this point?
Yeah, well, they want to keep pumping out crude oil. I think they really want to run oil down, which is what they've done. I think they're trying to squeeze the U.S. out of the markets in terms of the U.S. suppliers, because our cost of production out of the ground is a lot higher. And overall, I think it's kind of like a payback towards the states, and they're just putting the pressure on. And now things are out of control, and who knows who's really driving this price down at this point? I mean, I think there's a lot of things that come into play just in terms of overhead supply, of sellers wanting to get out, and the lack of demand. And I think things are spiraling out of control at this point.
We've been talking about a V-shaped recovery for much of the economy. What's your view on that from where you see it? Do you think that when it comes to oil, it will be a V-shaped spike on the other side of this, or more of a U-shape where it just takes a little bit of time for people to get back out there? Where do you see the oil going in that regard? Because a lot of short traders...
Yeah, I think crude oil... Yeah, I think crude oil and the overall equities markets are going to struggle a lot here. I think going forward, looking at the U.S. equities markets, I think we're going to have a lot of a market top that we saw in 2000 in terms of everyone bought into the tech bubble, everyone went, the price went parabolic stage, and that's what we had in equities last year. And everybody piled in, and what happened in 2000 is very similar in terms of the mindset right now. 2000, everyone saw zero earnings in the tech companies. They were giant money pits. And when everybody had realized it, when earnings came out, everyone hit the sell button. NASDAQ fell 40% over a few weeks. Same thing with the virus. Everyone saw earnings were going to be bad. It was blatantly obvious again. Everyone hit the sell button. And so now we've had this big bounce, the sell-off, and now this bounce. But I think this bounce is short-lived. In 2000, we saw 46% bounce. Right now, we're at about 30 or so percent on the equities market. And I think it's going to stall out and then roll over. I don't think the selling has ended. I think this is the start. This is the first bear market bounce in equities, and I think the economy is under a lot of pressure. And crude oil is usually a leading indicator of the global strength of the economies, and it's not painting a very clear picture, very bullish picture.
Now talk to us about what number we need to be seeing to have, I guess, some sort of trend or show signs that things are about to improve. What's the number that we should be aiming for I guess, from a stock perspective?
Yeah, in terms of the SP 500, I mean, we need to get back up around above the 3,000 mark. We need to hold there for some time, for several weeks. Based on the size of the trend that's in play, we don't want to look at just a quick break above it on an intraday basis. We want to see it hold for a week, potentially a month. That means investors are comfortable putting money in and holding their money. And then we could be kicked right back into a full-out bull market in stocks. And maybe this was what cleansed the market. As in terms of crude oil, I think we need to get back above $34 a barrel for stability.
Yeah, and then of course the jobless claims higher than expected. A lot of data out in the US this week. The experts we've been speaking to here in Australia have been suggesting that there could be some sort of correction on Wall Street this week because of all of the bad news coming out, particularly from earnings.
Yeah, it's going to be interesting to see how the market reacts, because if the selling is really done, if we've really put a bottom in here, if the market doesn't sell off on bad news, when everything's really nasty in the market and it stops going down, that's usually when you know everyone's kind of been washed out and the bottom has been put in, at least for a temporary basis for a few months. So we'll see how the market takes all the earnings. There's huge earnings coming out this week. And if it's a bloodbath in earnings and price actually hold their ground, that's going to be a very strong sign for the equities market. And I think we could see things rebound and continue to march up to that 3,000 plus mark on the SP 500.
And let's talk to us about shale. I mentioned it in my introduction there because, of course, the US has been trying to get away from being an importer of energy to now an exporter. That's been happening over the last 5-10 years. The price of oil, what does it do in terms of, as I say, the price of shale, etc., and how that industry is going?
I don't follow the shale too close, but obviously if there's going to be plants closing down with this low crude oil price, it's going to put pressure on shale, because there's a lot of natural gas, shale, all that kind of comes together. And overall, it's all going to suffer for a while. But the problem is, once everybody starts to think those energies have put in a bottom, we're going to see this huge recovery rally, just like we're seeing in the stock market. In terms of price range, everybody's going to jump in and start to buy it back up, even though there isn't much demand. Everyone's waiting. Even people who don't know much about the market are ready to jump in and buy oil and buy natural gas. In terms of jobs, I don't know what everyone's going to do, because there's going to be so many layoffs. I mean, we're seeing millions every week, and it just keeps ramping up.
All right, Chris, thank you so much for your time. Appreciate it.
Hey, thanks for having me.